Hey guys, what's up? It's me, Adam. You're watching Steady Invest. Over the past month, we've seen stocks go up ever since the election. Meanwhile, gold has been downtrending ever since it hit an all-time high back in August. Which is funny because back in the summer, all people could talk about was buying more gold as it was hitting all-time highs. This just comes to show how fast sentiment can change the market, either upward or downward. And it's really no surprise. As we keep getting news about potential vaccines, investors might be selling their gold and buying stocks that might recover as a result of a quicker economic recovery. Although we're still in the middle of a pandemic, lockdowns, super low interest rates, as well as money printing like we've never seen before, an argument can be made that gold will see all-time highs next year again. When it comes to investing in gold, there's different ways you can do so. One way is by buying the actual physical metal itself and either storing it in a vault at a bank or storing it underneath your mattress. A second way to do it is by buying an ETF that tracks the price of gold, or another way is by investing in gold mining companies or gold streaming companies. And in this video, we're going to be talking about one gold miner that would fit most portfolios if they're looking for gold exposure. That's Kirkland Lake Gold, ticker symbol KL, and it trades on the Toronto Stock Exchange and New York Stock Exchange. And they have the best balance sheet in the industry and have no debt, which is rare for miners as they usually rely on debt in order to grow their capital-intensive businesses. It's an excellent value play in my opinion, not to mention they also pay a respectable dividend, which isn't very common for gold miners. Let's get into more details. Before I do, if you haven't already, smash that like button. It helps my videos get out there. As well, if you're new to the channel, welcome aboard. Hit that subscribe button and let's get started. Alright, let's look at the price of gold over the last 50 years. There was a bubble back in 1980, it popped, and gold traded sideways for the next 20 years. The 2000 stock market tech bubble crash, and then we saw a huge bull run for the next 10 years. And then toward the end of the recession, the price went back down. And then over the last year and a half, we saw another big spike. We hit all-time highs back in August. And I thought this chart was pretty interesting as well. The orange line being the price of gold and the blue line being the Dow Jones. From the dot-com crash in 2000, gold actually outperformed the stock market over the next 10 years. But looking at the last 10 years, the Dow Jones has outperformed gold by a long shot. Now taking a look at Kirkland Lake Gold, they IPO'd back in 2015, and if you bought back then, you would have seen a 2,237% gain. And the reason I believe they've done so well, because how well financially managed they are. From the March crash to the peak, we saw a 132% increase, and from that all-time high, we see a 30% decrease. And what interests me is that we're now trading in the same range that we were back in June, where the price bounced off from a high from April. And we can see a bounce here as well mid-November. The dividend yields annually 1.3%, and it currently has a $14 billion market cap. They have 3 flagship assets, Fosterville, Macassa, and Detour Lake, which is the second largest gold producing mine in Canada, with the largest gold reserves and substantial growth potential. And they actually just acquired this mine earlier this year. If we look at their year-to-date net earnings, a 42% increase from the first 9 months of 2019, as well as 92% growth from the first 9 months of 2019 when it comes to their free cash flow. Almost twice as much free cash flow. And a big reason for this is the price of gold being so much higher than it was a year ago. As of September 30th, they had almost $850 million on their balance sheet, and just last week they spent $680 million for share buybacks. During this pandemic, they're thriving financially. And this is what I mean by good value. They returned $734 million to shareholders in 2020 through share buybacks and dividends. And they increased the dividend from last quarter by 50%. Taking a look at their revenue from 9 months ending September 30th versus the same time period last year, we see an 85% increase year over year. And no surprise, we see huge increases in net earnings and cash flow as well. Looking at their balance sheet from the end of last year, we see total assets at $2.5 billion. And total liabilities at $741 million. And that's just a thing of beauty, they almost have no debt on their balance sheet. And when I say they're good value compared to past quarters, they're trading at a forward PE of 8.9, and you see here 12, 13, 11, 15, 18, so way below recent historical numbers. But remember, nothing fundamentally has changed about the company. In fact, they're thriving. And looking where the price of gold is today, Kirkland Lake is going to continue benefiting from these inflated prices. And something else I want to mention, like stocks, like Forex, and commodities like gold trade the same way when it comes to charts and technical analysis. Remember, it's always supply and demand, and fear and greed, and of course world news. The company's highly efficient and low cost producing assets, which offer a cash operating margin of more than $1,100 per gold equivalent ounce, and that comes down to money management. Gold stocks like Kirkland Lake may also offer better returns than gold. With gold, only commodity price increases can give you return. With miners, you've got the possibility of increased production. For example, in the second quarter, Kirkland Lake's revenue soared a whopping 107%. Gold in the same period was pretty strong, but nothing compared to Kirkland Lake's revenue gains. With surging production, the company had gold prices and production increases boosting its sales. That's a 1-2 punch. And what's important to take note of is that we have to treat the stock like any other company that we would invest in. It's not just the price of gold that's going to be moving the stock. It's the infinite amount of variables as well. And this is pretty interesting. From November 18th, Goldman Sachs predicts gold price to hit $2,300 next year on inflation risks. And the Bank of Canada sees interest rates on hold until 2023. And check this out, 22% of all US dollars today were created this year. That's certainly one way to decrease the value of your dollar, money printing. So there are a few catalysts that could jump the price of gold over the upcoming year, but no one knows for certain. If you do want gold exposure from a reliable miner at good value, look no further than Kirkland Lake Gold. As always, make sure you do your full research before investing in any company. And let me know in the comments below what you think of Kirkland Lake Gold. Thank you very much for watching. Make sure you smash that like button and subscribe for future updates, and I'll see you in the next video.